All right, guys, I'm here to explain the Wyckoff method really quickly as possible. I don't want to waste your time, mine. Who's Wyckoff? Wyckoff was this trader in the early 1900s who saw certain patterns emerge when he worked for, I think, JP Morgan or something, some large institution, and he was trading for them, analyzing. He realized that price tends to move in fairly predictable um, ways in general. That's how we developed those two schematics, the two different distribution and accumulation schematics, if you look at them. Um, the reason why it's powerful is you start seeing them everywhere. If you understand how the schematic works, you start seeing these patterns everywhere. And it kind of, if you've traded for a long time, especially in crypto, you've kind of seen this already. You just didn't know it was a thing. You've seen these like trident, three up thrusts, maybe four, right? You've seen these patterns all the time, and you probably know of it. You just call it by a different name. One, two, three, right? So the distribution, the top phase, and the accumulation are basically inverses. There's slight differences. You analyze the volume differently. We're not going to get into volume analysis right now. I'm just going to explain to you what it is in general. But so the way it works is you'll get these three up thrusts. Let's actually create the trading range. So this would be, whoops, let's do this. Where's my array? Boom. Somewhere like this. Let's lower that, copy it. This will be essentially the trading range right here, right? And it's comprised of, the trading range is comprised of the buying climax, right? Then we got the AR, automatic rally. Then we got a little secondary test right here, a little tiny one, where the price tries to reach the top point again, right here. Then we have, what do we have here? We got the up thrust, boom. Another thrust past outside of the trading range, which are these two lines. Then we got a little retracement. This is very important right here, this retracement. It actually has to go more than 50% below these two, something I'm going to teach you later, but more than 50% below or past the mid heart line of this trading range. So the heart line would be somewhere around here. I don't want to get the tool out, so it's something like this, right? You want it to enter back into the trading range, go past 50%. It's just a rule I've found out over time to gauge what's an actual distribution and what's just a random pattern. Then we got the up thrust after distribution up here. This is it's like preliminary support, right? I'm sorry, no. Yeah, that's what it is. And then we have, let's get rid of this. This is the UTAD, boom. And this is also some type of preliminary support, right? And this structure, you'll see it everywhere. What I just defined were certain things that you can look at. If you open up Google, you go to Wyckoff distribution. There's two different types. They're extremely easy to understand. Here we go, right? BSY, that's what it is. BC, AR, ST. We didn't have a sign of weakness in there. UT, UTAD. And then the last point, uh, support, something like that. It doesn't really matter. The main thing is that is the way it's built, right? People don't understand when you look at the actual schematic, it doesn't matter if it shows something like this, because a lot of these areas are sort of noise. There's noise within the schematic everywhere. So the way you actually draw this is you're going to find your buying climax and AR. That creates the trading range. That's the most important thing. That's the first thing you look at. Then as it develops, you're looking for an up thrust that leaves the trading range. This point has to happen. This point has to happen. This in the middle is all noise. It could be basically going down here for a long time and then it goes up. Then you count the U thrust. You don't say this is a U thrust, up thrust, right? You have to wait until it leaves the trading range. Whether that takes a bunch of time or less, the scale will work itself out. But you can't call this an up thrust, right? Sometimes the up thrust might actually come here and not break it. That happens as well. The recent distribution I posted did something very similar where it was a downward slope and it just touched it 3 times like this because the selling pressure was very strong. It could happen, but these are classic ones, right? So you want the UT to go past the 50% line right here. Then the up thrust is another thrust past even the UT, but it doesn't have to be. Sometimes it'll actually just kind of create a little mini distribution here and then dump, as opposed to going up past, right? Because there's not enough buying power to actually get it up there. Then this usually breaks down, hits the AR, then bounces all the way back to take care of some imbalance that's here, right? Or it's just going to bounce off the top part of the trading range. This happens almost all the time. Like I've seen this happen. I can't even count how many times. You'll see a massive collapse here, and then it'll instantly retrace a bunch of time. It'll retrace almost all the way up, and then just collapse much harder. So the way you actually trade these is once you see the structure building, this part you want to set up your trades near these trading zones, right? These lines. You want to either, if you want to basically do a short from here, which means once this part starts going down here, collapsing, and you see it start reversing back up, you want to set a limit to short from here, right? And where do you place the actual stop loss? Well, you don't do it right after. You'll have to find a zone. You can use the stack coin 1 indicator to use the resistance lines. The higher time frame, the better. But it's not too difficult, right? You'll be able to figure this out. You either do the short from here, or you're going to do the same thing here. You're going to wait until it crosses and then retrace up. Now this collapsed insanely hard, so it actually came back right here a little bit. But other than that, you wouldn't have caught it. Usually these things might, drag on a little bit and then collapse, but it is what it is. This is the Wyckoff method. In general, the same exact thing applies to this accumulation. It's the opposite from the distribution. You have the 3 thrusts. You have the selling climax. You have the AR. You can say the secondary test. You got the up thrust. They have a different name for it in the accumulation. No, I'm sorry, this is not the up thrust. This would be that up thrust here, the equivalent of this. And then you have the equivalent of the UTAD down here, but it didn't actually go past this point. So I'll explain a little bit more out of all this, how you trade it. One thing I've noticed is there's always this type of break line right here whenever you're doing it. And you can build this line literally after this starts developing, right? It'll usually show you a pretty strong resistance line. And it seems to be whenever this is broken, it'll retrace to either the top of the trading range or it'll retrace and hit it and go down. I don't know why it happens like that. Every single time I've seen it, that's how it's happened. And I've seen it on all different time frames and scales. So don't think this is only on the daily. You can use this. Usually what will happen is there's a macro structure like this. And then right here, if you zoom in, there's going to be another little distribution, right? Let me see if I can look at it quickly, right? Looks like there's going to be another little mini distribution there, especially up here as well. There's usually a lot of distributions there. So if we zoomed in, it's a rougher one, right? It goes up here. You can say here was the first buying climax AR. This level, because it's following this trend line, it's going to look a little weird, right? It's not going to follow that same thing, but you can see clearly there's 3 thrusts up, right? Here, 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 and then a collapse. So anyways, this is the first Wyckoff video. I'll explain a lot more coming up, guys. This is just how I trade them. I use them all the time. It's an incredible thing to know. It's very useful. Don't let people tell you that it's not.